You're looking at the Bitcoin chart right now, and while you might still be rethinking your last trades, something is happening that professionals have been anticipating for weeks. After briefly reclaiming $70,000, the price has suddenly rolled over again. Within just a few hours, Bitcoin has dropped roughly 4% and is now trading around $67,500. And this is where it gets critical. We are sitting directly on a decisive support zone between $67,000 and $67,300. This is not just another area on the chart. This is a line in the sand. While you may be hoping for a quick bounce, the on-chain data tells a very different story. Large wallets, so-called whales, have moved thousands of Bitcoin onto exchanges in the past several hours. Some individual transfers exceeded 5,000 BTC in a single transaction to major trading platforms. And that's not random. Historically, massive exchange inflows often signal one thing: readiness to sell. Not necessarily an instant dump, but preparation. And this is where the game begins that most people don't see. While you're panicking, while smaller traders nervously tighten their stop losses, the whales understand what's happening beneath the surface. They see the liquidity. They see the order books. They know exactly where the leveraged positions are stacked. The market is playing a game you don't see. If this $67,000 support breaks decisively, we're no longer talking about a minor pullback. Technically, below this zone there's a gap down toward the $64,000 area, and beneath that sits the psychologically crucial $60,000 level. And we all know what round numbers mean in crypto. They act like magnets. They attract price. Why is this so explosive right now? Because we only recently reclaimed $70,000. That breakout created hope, created FOMO. Many traders entered fresh positions in that zone, some with leverage. And those exact positions could now become liquidation fuel if the market continues lower. A cascade of liquidations works like a row of dominoes. First one falls, then the next, and suddenly the sell-off accelerates within minutes. Let's zoom out historically. In 2017, we saw similar situations where large wallets transferred Bitcoin to exchanges ahead of major corrections. In 2020, just before the COVID crash, exchange inflows spiked significantly. In 2021, near the previous all-time high, whale transfers to trading platforms increased clearly before the market entered a months-long correction. But history doesn't repeat exactly. It rhymes. And that's why deeper analysis matters. Because alongside these transfers, we're seeing something else. The total amount of Bitcoin held on exchanges remains relatively low compared to previous cycles. Many coins are sitting in cold storage, in long-term holding addresses. Long-term holders are not aggressively selling. That means the immediately available supply is limited. This creates a fascinating paradox. On one hand, we see whale movements toward exchanges. On the other hand, structurally, supply remains tight. Since the last halving, the daily issuance of new Bitcoin has been cut in half. That means fewer new BTC are entering the market, while institutional demand still exists, even if it fluctuates short-term. Spot ETFs continue to hold over 1.2 million Bitcoin. Yes, there have been outflows in recent weeks, but we're not seeing panic-driven mass liquidations. That's a major difference compared to earlier cycles when institutional vehicles simply didn't exist. Today's market is deeper, more structured, and more complex. And then there's the derivatives market. Open interest across major futures exchanges is elevated, very elevated. If price breaks below $67,000, millions of dollars in long positions could be liquidated. Those liquidations would add further selling pressure. It's like holding a beach ball underwater. The deeper it's pushed, the stronger it can rebound, but first the pressure builds. From a macro perspective, we're also in a sensitive phase. Inflation hasn't completely disappeared. Monetary policy remains relatively restrictive. At the same time, investors are still searching for alternative stores of value. Governments and corporations continue discussing Bitcoin as a strategic reserve asset. MicroStrategy has expanded its holdings further. And these long-term narratives stand in sharp contrast to short-term volatility. So the real question is, are we witnessing a final capitulation before the next major impulse, or the beginning of a deeper correction? If $60,000 gets tested, sentiment will shift dramatically. Media headlines will scream, crash. Social media will fill with panic. And that's often where the largest gap between emotion and reality appears. While retail sells, strategic investors accumulate. On-chain analysts like Glassnode show that many short-term holders are currently sitting near their cost basis. A break below $67,000 would push a large portion of these participants into unrealized losses. And losses create fear. Fear creates selling. But this is also where opportunity is born. In previous cycles, whether 2017, 2020, or even 2022, periods of maximum uncertainty often mark turning points. Not instantly, not always with a V-shaped recovery, but as structural accumulation zones. Think of the market like a chessboard. The pieces move visibly, but the strategy forms invisibly in the mind of the player. Whales don't think in hours. They think in cycles. They think in supply compression. They think in liquidity events. If Bitcoin defends $67,000, we could see a short squeeze. Traders betting on the breakdown would be forced to buy back in. That could drive price quickly back towards $70,000. But if support fails decisively, the path to $64,000 and potentially $60,000 could open faster than most can react. What matters is not emotion, it's structure. Watch the exchange inflows. Watch the open interest. Watch the reaction at $67,000. Headlines don't move markets, liquidity does. Let me know in the comments. Do you think we're witnessing an orchestrated liquidity grab before the next upward move? Or are we at the beginning of a deeper correction toward $60,000? I want to hear your perspective. If this analysis helps you understand the mechanics behind these moves, support the channel. Because this isn't about panic or hype, it's about structure, data, and the game behind the game. Bitcoin is at a critical inflection point. $67,000 determines short-term stability or acceleration to the downside. $60,000 determines psychological control of the market. And while the crowd stares at red candles, millions are moving in the background. Not loudly, not visibly, but strategically. The question isn't whether volatility is coming. The question is which side you'll be on when it does.